The 3 top stocks to buy in March 2021. Hello guys. So in this video I am going over the top 3 stocks for the month of March 2021. I am obsessed with the stock market, and I have spent the last month analyzing hundreds of stocks. Right now be sure to watch all the way through to get my full analysis on each of these companies. I will go over key numbers, recent news, and why I expect them to grow. By the way, if you want to earn $100 to $10,000 by working only 3 to 4 hours a day, and without leaving home, there is something I have included in this video from which you can start earning right away. So stay tuned. NIO. So let's get started. First stock on my list is Nio stock, ticker NIO. This is an electric vehicle and battery company that's headquarter is in China. Right now they have 4 very good looking cars on the market with more to come. So right now Nio is trading at 57.11 cents with a 52-week low of 2.11 and a 52-week high of 66.99. So right away you guys can see that this company has grown so much in the last year. If we take a look at their 1-year price chart, we can see that their stock price was hovering under 10 for a long time, and since June or July of 2020 that's when it really started to grow. We had a huge rush followed by a correction, and since then Nio has been trending upwards. This company has a market cap of $89.029 billion. We can see that they have a price to sales ratio of 34.86 and a price to book ratio of 77.97. As far as profitability, they are not yet profitable with a profit margin of negative 56.26%, and also a negative return on equity of negative 116.34. Their balance sheet however shows a very good current ratio of 2.42. Which means that they have 2.42 times the current assets as current liabilities. It's always interesting to see what analysts have to say, so on the scale of 1 to 5, 1 being a strong buy, and 5 being a sell, Nio is rated as a 2.4. It means that it is between buy and hold. The average analyst price target is 49.59, which is about 15 lower than the current price of $57.11. Now when I recommend Nio, it's not me pushing you guys away from Tesla. In fact, I think that Tesla is a tremendous opportunity. In 2020 EV sales in China crossed 1 million cars, and that is such a small number compared to where this market will be in the next decade. Since Nio is not yet profitable, we can take a look at its price to sales ratio of about 35, which is a little bit higher than Tesla's of 30. Their recent Nio Day presentation announced a new luxury sedan called the A7, which has a huge 150 kWh battery pack. Now some people are wary investing in Chinese companies, but I think it could be a big selling point here faced with competition from other EV companies. Like Tesla, it's popular opinion that the Chinese government would want to see a Chinese EV company grow massively. These companies provide a lot of data, and the Chinese government wants to be in control of that. EV infrastructure in China is also improving, and buying EV cars is becoming more and more trendy. Also its batteries as a service BaaS business model will create a lot of recurring revenue. There's a lot going on for Nio, and if you're big on the shift from internal combustion engine cars to electric vehicles, then Nio is definitely a stock to watch. I repeat, this is definitely a short-term speculative investment, so you should be prepared for some pullbacks. Microsoft, MSFT. Number 2 my list is Microsoft stock, ticker MSFT. This is a multinational technology company that's based in the US. And they make computers, software, electronic services, and so much more. It is a rather boring stock, but one with a lot of growth potential, so right now Microsoft is trading at 232.90. With a 52-week low of 132.52, and a 52-week high of $240.44. We saw Microsoft take a pretty big hit with the pandemic, but ever since then it's been on the uprise to hit the low 200. Microsoft is a huge company with a market cap of $1.761 trillion. They have a P ratio of 37.57 and earnings per share of 6.20, and a small dividend of 0.96%. They have a 5-year expected price earnings growth ratio of 2.61, and the price of the book ratio is 13.84. Microsoft is wildly successful with their profitability, and right now their profit margin is sitting at 33.47%. They also have a sky-high return equity of 42.7. They're sitting on a whopping $131 billion in total cash, and they have a very great current ratio of 2.58. Analysts currently rate Microsoft as a 1.6, meaning it is a pretty strong buy. And the average analyst price target is $244.25, which is a tad higher than the current price of $232.90. So Microsoft just reported the quarter to 2021 earnings, and wow, these numbers are really good. They hit revenue of $43.1 billion, which is about 7% higher than expectations. Their earnings per share was also 25% higher than expected, and their cloud and personal computer sectors crushed it as well. Gaming revenue topped $5 billion for the first time due to the new Xbox release, and Microsoft has said that they expect double-digit gains in revenue and profits for the full fiscal year ending in July 2021. The cloud industry is growing a lot, and Microsoft is the second biggest cloud provider just behind Amazon. They've also announced exciting partnerships with Cruise and GM, in which Microsoft would be their preferred cloud provider. I know Microsoft is not the most exciting stock, but we are investing to make money, right? In the long term, you really can't go wrong with Microsoft. They have fantastic numbers, the right teams in place to grow in the next decade, and they are in heavily growing industries. I mean, they hit $40 billion in quarterly sales for the first time, and $15 billion in profit. Opendoor, Open. The third stock on my list is Opendoor stock ticker. This is an online real estate company that has a really interesting business model. Open doors are allowing people to sell their homes, as is then they basically flip it and sell it for a profit. When done at scale, this can make a lot of money. So right now Opendoor is trading at 25.18 cents. With a 52-week low of 10.55, and a 52-week high of 32.39. If we take a look at their price chart, we can see that their stock has been fluctuating in price a lot. But right now it is trading under its all-time highs. They have a market cap of $13.709 billion, and we don't have enough data to know their P ratio or earnings per share. They are not yet profitable, and we see a profit margin of negative 8.1%. They have total cash of about $550 million, and they have a very great current ratio of 5.16. Now we have very little data from analysts, but right now the rating is at 1.7. Meaning it is a buy. And the average analyst price target is $32.50. Which is quite a bit higher than the current price of $18. So Opendoor's back merger closed on December 17th. So it is a very new stock that is trading under its highs. Right now quarter 4 stats have not yet been released, but we do have some information about the company's revenue. In 2019 they brought in $4.7 billion in revenue, although that did decrease substantially in 2020 due to the pandemic. Now they are not yet profitable, but once their frictionless business model picks up steam, I think profits will be plenty. Their sophisticated algorithms allow Opendoor to really be spot on with their home analyses, knowing exactly how much profit is in each deal based on all the factors, like buy price, renovation costs and more. It's also priced relatively cheap compared to some of the other big real estate internet companies. Like Zillow and Redfin, now they are applying e-commerce and tech to the real estate buying and selling process, which I believe is a big disruptor in a very traditional industry. Overall, I think the stock is better for people with some short-term risk, but in the long term, I think Opendoor will do very well with its share price, and that is why I'm adding more of it into my portfolio. Now, here is a bonus part for all of those who wants to earn $100 to $10,000 by working only 3 to 4 hours a day, and without leaving home. The way you can earn is called affiliate marketing. There are many websites who are offering this program, but Amazon is the best and easy of them all. The only thing you need is your own website or blog. Don't try to do affiliate marketing in social media. Believe me, it will not work because nobody uses social media for shopping, obviously. But if you don't have your own website, you can become our partner on our website and can upload as much products as you want without giving us any single percentage of commission. The link to the website is in the description of this video. Visit our website and read all the details regarding becoming our partner under Privacy Policy tab, and earn as much as you want.